The previous lecture was interrupted due to the loss of internet connection. So the portion that we have discussed, we are continuing after that in this particular lecture. So already we have explained that in bullish trend there will be three phases. Phase one where confidence will build up followed by a correction. Then again the price will rise because some investors have booked the profit and company has also started performing well. So the combined effect of all this will be again a second trend of the ups price movement. Then again it will be followed by some correction factor. But note that when the first trend has stopped and correction factor started, the correction factors after reaching a certain lower point, again the secondary trend will come and you will observe that when the secondary trend is again followed by a correction factor, you will get two peak points. One is the peak point of first trend or first phase, and you will get a peak point of the second phase. If it is uptrend, definitely peak point of the second phase will be higher than peak point of the first phase. Then after some correction, again third phase will come. So let us go to the points of this particular slide. Here we have started with third phase. In third phase, the price will advance due to inflation and speculation. So previously, the logic for upward movement was due to building up of the confidence and booking up some profit by the investors. So that was a genuine cause for which the price was rising. But in third phase, the inflation factor will come and speculators will be very much active, due to which there will be a third phase of uptrend. So whenever this phase comes, according to Dow, the time has come when where reversal trend we will observe. So next point is line chart will indicate formation of three phase indicated by three peaks. So pick up first phase, pick up second phase, and pick up third phase. If it is uptrend, these three peaks will be always higher than the previous two peaks, or previous peak. Each peak will be followed by a bottom before moving up to the next phase. Bottom means correction that we have already explained. Peak of the next phase will be higher than the peak of the previous phase. Each successive bottom will be higher than the previous bottom. The formation of higher peak and bottom indicates bullish trend. And volume of transactions, that is another crucial indicator, will continuously rise when there is bullish trend. Just opposite will happen in case of bearish trend. Like bear, it has three phases. In first phase, price begins to fall due to abandonment of hopes. In bullish, the building up of confidence has increased the price. Now the confidence is lost. So gradually price is falling. And when the price is falling, investors start selling their share and booking their profit. And this causes first phase of bearish trend, followed by a correction factor of uptrend. Then again the second phase will come. In second phase, companies report on lower profit and dividends will affect the market, and some of the speculators, some of the investors will not be able to make the profit that others have made in the first phase. So that will create again some depressionary effect, and due to which the price will again fall further. And sell pressure will increase, price will move downward further, and then again there will be some correction factor, and then third phase will start. In third phase, price will fall further due to distress selling. Distress selling is forced selling. Means total hope has been lost, and that is why the price is falling. So it will form the lower tops and bottoms. Volume of transaction will decline. So in the next PPT, we will show you the chart or diagram to explain this trend. Just go through this chart. First one indicates bullish trend and second one indicates bearish trend. Look at the curve. First phase is forming a peak A, followed by a correction up to X. Note that the correction is approximately one third to two thirds, but not more than that. After that, again, the phase 2 will come and price will start picking up to B, followed by a correction up to Y. Then again, third phase, which will end up peak at C, followed by a downtrend. So once the three peak has been achieved, it is expected that now opposite trend will come. And why we are saying this as bullish trend? Because if you compare height of A, B, and C, you see just it is rising. And if you also consider a bottom point XY, you just see bottom point is also rising. So if you draw a tail line, which is linear, you will see the line has a positive slope. It indicates bullish trend in the market. And normally this trend prevails for a year or more. Just opposite in case of bearish trend. Here, this is your first phase, this is your second phase, this is your third phase. And just see the lower bot peak, lower peak ABC is continuously declining. And also corrections peak is declining. So it indicates downtrend, and if you draw the trend line, the trend line will also be inverse in shape. So this is the basic concept of Dow theory, of which shows the pattern of movement of the shares in the market. Now, in general, we are going to the basic principles of technical analysis. Most points of these principles are already covered in our discussion, so let us just go through the points here. Market value of security is related with demand and supply factors operating in the market. Both rational and irrational factors will affect demand and supply. Rational factors is obviously here, which creates confidence or loss of confidence among the people. It is followed by some irrational factors coming from sentiment, emotions, etc., which are attached with a particular security among the investors. So that irrational factors which cannot be quantified or expressed are ultimately reflected in the market sentiment and affect the price movements of the shares. Third point is security price movement is continuous in a particular direction for some length of time. Change in the stock price will change with the shift in demand and supply from uptrend to downtrend. Shift in demand supply is detected through charts. This is the most crucial one, which we will introduce now one by one. Actually, charts means some diagrams which indicate the pattern of movement. And by analyzing those charts, you can get a good idea about the future patterns of the price. So patterns in the charts are analyzed to forecast the price movement.